Boom. Stop everything you're doing right now because I'm about to show you something that's going to completely shift your perspective on crypto investing. While everyone's been chasing AI tokens and arguing about which layer 1 will flip Ethereum, there's been a financial revolution happening in complete silence. And honestly, it's been driving me absolutely crazy watching people miss this. I'm talking about Stellar Lumens, XLM, and before you roll your eyes thinking another payments coin, hear me out because the data I've uncovered over the past 6 months will blow your mind. We're looking at institutional capital deployment strategies that most retail investors won't understand until it's already priced in. Hit that subscribe button right now, smash the like if you believe in following institutional money before it becomes obvious, and buckle up because what I'm about to reveal involves treasury management solutions, cross-border settlement optimization, and regulatory compliance frameworks that are reshaping the entire $840 billion global remittance market. According to Federal Reserve research on payment system modernization, we're witnessing the largest transformation in cross-border finance since the creation of SWIFT in 1973. And guess what's powering a significant portion of these infrastructure upgrades? Stellar's Federated Byzantine Agreement consensus model. Now pay close attention, because this is where most analysts get it completely wrong. They look at Stellar as just another altcoin competing for retail attention. But the real story is in the institutional-grade liquidity deployment happening right now. The global cross-border payments market processes approximately $37 trillion annually. That's not a typo. $37 trillion moving through systems that were designed in the 1,970 seconds. SWIFT handles over 40 million daily messages. But here's the kicker. Settlement still takes 2 to 5 business days with multi-% fees hidden behind correspondent banking layers. Industry insiders report that global remittance volumes hit $840 billion in 2024, with average corridor fees sitting at 6.49%. Think about this for a second. Families sending money home are losing over $55 billion annually to middlemen. That's more than the GDP of many countries, just evaporating into the banking system. But here's where it gets interesting. Stellar transactions cost approximately $0.00001. We're talking about 5 orders of magnitude difference in cost structure. When MoneyGram, that legacy remittance giant everyone thought was dead, processed over $30 million through Stellar's rails since late 2023, smart money started paying attention. This isn't some theoretical blockchain use case. MoneyGram's integration allows users to convert USDC directly to local cash at over 475,000 locations globally. We're talking about real-time gross settlement for everyday people who were previously excluded from efficient financial services. The institutional revolution nobody talks about. Light bulb moment. Here's what's been keeping me up at night researching. While everyone's been focused on DeFi yields and NFT drops, institutional capital has been quietly building the infrastructure for the next financial system. And they're doing it on Stellar. Franklin Templeton didn't just dabble with tokenization. They launched the first fully tokenized UCITS fund in the European Union, with over $580 million in US. Treasury bills now living on Stellar's network. Transaction finality occurs in under 5 seconds, and redemption requests settle within minutes rather than days. Let me break down what this actually means for systematic risk assessment. Traditional money market funds require T+2 settlement, multiple clearinghouses, and counterparty risk mitigation protocols that cost institutional investors millions in operational overhead. Franklin Templeton's Atlanta office reported a 35% reduction in reconciliation costs and 50% decrease in settlement times within the first quarter of launch. That's not just efficiency gains, that's Basel III compliance standards being met while eliminating correspondent banking alternatives entirely. When you understand how treasury management solutions work at scale, you realize this is massive. But wait, it gets even crazier. Societe Generale launched EUR-backed stablecoins on Stellar for European corporate treasury clients. PayPal announced PYUSD integration for 400 million users across 170 countries. And Arcax tokenized $26 billion in traditional securities during pilot programs. According to institutional research from multiple asset managers, we're looking at over $3 billion in real-world asset tokenization, hitting Stellar's ecosystem by year-end 2025. That's a 10-fold increase from the $290 million at year-end 2024. And you guys, I have a special trick for you which nobody seems to be using, and I cannot wrap my head around why. Because if you sign up through my link down in the description onto the BuyDefi exchange, you get a 10% deposit bonus. And now stay with me here. Now, here comes the important part. If you have any trading capital on any other exchange and you move it to your newly created BuyDefi account, you get on top of your capital. You moved another 10% extra trading capital. As an example, if you move or deposit $10,000 to your account, you get a $1,000 for free. And here is why this is possible. BuyDefi makes money on trading fees. The more capital you have, the more you trade. The more you trade, the more they earn. So they're literally investing in your trading activity by giving you extra capital up front. And unlike other platforms where bonuses are in the 1 to 3% range, BuyDefi's bonus is a full 10%. I am not kidding. I really don't understand why nobody is doing this. To me, it really seems like people sometimes are too lazy or just don't like free money. I kindly ask you to pause this video and take your time to make an account. You can thank me later in the description of this video. All right, let's jump back into the video. Mega reveal. The $15 million humanitarian infrastructure. This changes everything. Here's the data that absolutely shocked me when I first uncovered it. And this is exactly the kind of institutional validation that creates generational wealth opportunities before the mainstream catches on. The United Nations High Commissioner for Refugees isn't just testing blockchain payments. They've actively distributed over $15 million in USDC aid to displaced populations using Stellar's network. The International Rescue Committee scaled from 100 recipients to 5,000 wallets by April 2023, earning the Best Impact Project Award at Paris Blockchain Week. Think about what this represents from a macro perspective. When the world's largest humanitarian organizations choose your infrastructure for crisis zone deployments, that's not speculation, that's production-grade validation under the most challenging conditions possible. Aid recipients use smartphone wallets to receive USDC, redeemable at MoneyGram locations without bank accounts or physical cash. Transaction costs dropped to under $1 per recipient, less than half of traditional distribution methods, and administrative processing went from weeks to a single day. IMF working papers reveal that blockchain-based cash assistance programs could save humanitarian organizations over $16 billion annually while improving transparency and reducing fraud. Stellar's transparent ledger enables donors to track funds in real time, creating accountability mechanisms that were impossible with traditional aid channels. The central bank digital currency explosion. Now, here's where it gets truly mind-blowing. While most crypto investors are still debating whether CBDCs are good or bad, central banks worldwide are racing to deploy them. As of mid-2025, 137 countries have active CBDC projects, with 49 nations in pilot or advanced development phases, representing 98% of global GDP. Central bank pilot programs demonstrate something remarkable. Stellar's consensus model allows monetary authorities to maintain full control over asset issuance while benefiting from blockchain transparency and efficiency. The Reserve Bank of Australia's EOD pilot processed $550,000 in programmable payments, showing how traditional monetary policy can leverage distributed ledger benefits without sacrificing regulatory oversight. Ukraine's National Bank partnered with Stellar for electronic hryvnia development, processing over $200 million in transactions, including salary disbursements for public sector employees and real-time tax payments. Brazil's central bank initiated a CBDC prototype focusing on low-value payments and microcredit distribution, with findings indicating that Stellar's ledger could seamlessly settle tens of thousands of transactions per second with negligible latency. Treasury Department sources confirm that European central banks are exploring tokenizing retail CBDCs with programmable money features such as conditional disbursement and embedded compliance. When sovereign nations start building their monetary systems on your infrastructure, you're not just holding another crypto token. You're owning the rails for the future of money itself. Protocol 23, the technical breakthrough everyone missed. That just happened. In September 2025, Stellar activated Protocol 23, codenamed WISC, introducing parallel transaction processing that supports over 5,000 transactions per second while reducing smart contract execution costs by up to 70%. Here's why this matters for institutional adoption. Most blockchain networks suffer from unpredictable transaction fees and network congestion that make them unsuitable for enterprise treasury operations. Protocol 23's parallel execution and aggressive caching deliver deterministic performance that meets institutional-grade liquidity requirements. The Soroban smart contract platform processed over 12 million contract transactions in Kone 2025 alone, with average execution costs under 0.0005 XLM and latency under 300 milliseconds per contract call. We're talking about formal verification support and compliance integration that enables regulated institutions to deploy blockchain services without compromising legal requirements. Developer adoption surged with over 1,200 active Soroban projects by Q2 2025, documenting a 30% reduction in time to market due to improved SDKs and API enhancements. The ecosystem includes decentralized oracles for price feeds, cross-chain bridges for Bitcoin and Ethereum assets, and compliance oracles for KYC divided by AML verification. The competitive landscape. Why Stellar dominates? Let's be brutally honest about where other networks stand. Bitcoin, digital gold with 10-minute settlement times and $5 plus transaction fees during network congestion. Ethereum, brilliant for DeFi innovation, but gas costs spike to double digits during peak periods, making it unsuitable for micropayments. Solana boasts ultra-high throughput and vibrant DeFi ecosystems, but it primarily serves speculators and high-frequency traders. It lacks focus on regulated cross-border corridors and compliance features that institutional capital demands. Here's the kicker. Stellar's federated Byzantine agreement achieves transaction finality in under 5 seconds while consuming just 0.00002 kilowatt hours per transaction. Compare that to Bitcoin's 1,200 kilowatt hours energy consumption, and you understand why ESG-conscious institutions choose Stellar for digital transformation initiatives. Ripple's XRP ledger targets the same payment corridor optimization, but their focus remains Tier 1 banking relationships. Stellar's mission targets financial inclusion, the underbanked populations, NGO operations, and government CBDC implementations that represent the fastest growing segments of blockchain adoption. The tokenomics flywheel nobody understands. Think about this carefully. XLM's fixed supply of 50 billion tokens with approximately 28 billion in circulation creates natural scarcity as network utilization increases. Every transaction, every anchor operation, every multi-asset settlement requires XLM for fees and liquidity provision. This isn't inflationary tokenomics designed to extract value, it's deflationary pressure from genuine utility demand. Daily transaction volumes consistently exceed 200,000 operations, with aggregate token transfers surpassing $500 million on peak days. Network validators number over 200 independent entities spanning financial institutions, technology firms, and NGOs, ensuring geographic decentralization and operational resilience. The implications are staggering when you consider Stellar's total value locked grew from $65 million in January 2025 to $152 million by August. That's 134% growth in ecosystem value, driven by real-world asset tokenization and institutional DeFi adoption, not speculative yield farming. On September 8 to 9, 2025, XLM's trading volume surged 85% to $333 million, coinciding with technical indicators signaling institutional accumulation in the $0.38 to $0.39 range. Corporate trading desks reported accumulation patterns that suggest Treasury interest in Stellar as a predictable regulated settlement layer for digital assets. The regulatory catalyst, changing everything. And here's where it gets wild. The Genius Act's clear framework for tokenized securities creates massive tailwinds for Stellar's compliance-focused ecosystem. MiCA implementation in Europe provides explicit guidelines for stablecoins and asset reference tokens, with Stellar's architecture designed specifically for these regulatory requirements. Global standards bodies, including the Bank for International Settlements Innovation Hub have endorsed federated consensus mechanisms as compliance-friendly alternatives to proof-of-work systems. Central bank research consistently identifies Stellar's consensus protocol as meeting 87% of CBDC infrastructure requirements. This isn't speculation. It's documented institutional assessment from the world's monetary authorities. When regulatory clarity improves across key markets, institutional capital deployment accelerates exponentially. We've seen this pattern with every major financial innovation, from derivatives to ETFs. The macroeconomic perfect storm? Here's what nobody wants to tell you. We're living through the perfect macroeconomic setup for payment rail modernization. OECD inflation data shows consumer prices climbing 4% year over year in May 2025, more than double pre-pandemic averages. When fiat currency confidence erodes, institutions seek transparent, efficient alternatives for cross-border value transfer. JP Morgan forecasts core inflation rising to 3.4% annualized through H2 2025, driven by geopolitical tensions and supply chain disruptions. This stagflationary environment creates massive demand for stable, programmable money rails that can bypass traditional correspondent banking bottlenecks. World Bank data indicates that remittance volumes approach $800 billion annually, with blockchain-based solutions capturing 12% of the market, projected to exceed 20% by 2026. Stellar's share of this digital remittance segment positions it to process over $100 billion in on-chain remittance flows by 2027. The opportunity whispers while others shout. I'm speechless. Here's what I've learned after 6 months of deep research. The biggest opportunities in crypto never announce themselves with fireworks and social media campaigns. They build quietly in regulatory meetings, pilot programs, and enterprise partnerships that most retail investors never hear about. Remember when everyone was chasing DeFi summer while institutions were quietly accumulating Bitcoin? The same pattern is happening with payment infrastructure. While retail chases meme coins and layer 1 narratives, institutional capital is embedding itself into the rails that governments and corporations use to move money. Stellar's network effects create increasing returns to scale. Every new anchor adds liquidity pathways. Every government pilot validates the technology. Every corporate treasury implementation proves the business case. This compounding adoption cycle is exactly how platform businesses capture trillion-dollar markets. Position sizing and risk management. Let me be completely transparent about systematic risk assessment here. Stellar faces competition from other enterprise-focused platforms like Hedera, Algorand, and Avalanche. Market fragmentation across stablecoin ecosystems creates complexity for cross-asset liquidity management. Regulatory headwinds around digital asset custody and sanctions compliance could impact adoption timelines. However, Stellar's proactive engagement with policymakers, continuous security auditing by firms like Trail of Bits and Certicay, and adaptive compliance SDKs significantly mitigate these operational risks. Capital preservation strategies for 2025 should include exposure to infrastructure, enabling global financial system modernization. Stellar represents the rails, not just another token hoping for a speculative appreciation. The institutional adoption nobody sees. This might blow your mind. Venture capital investment in Stellar-based startups totaled $200 million in 2024, representing a threefold increase from 2022. Notable funding rounds include $50 million for regional remittance applications and $30 million for tokenized asset custodians. Corporate treasury teams at multinational firms are quietly exploring stablecoin settlement on Stellar to hedge foreign exchange volatility in intra-company payments. These aren't speculative trades. They're operational efficiency improvements that could reshape how global commerce handles cross-border transactions. The SDF's Enterprise Pilot Program, launched in 2025, provides technical guidance, compliance support, and co-marketing for Fortune 500 entities, evaluating Stellar for cross-border use cases. When you see this level of institutional infrastructure being built, you know something big is coming. The moment of maximum opportunity. We're approaching what I call a maximum opportunity convergence. Institutional adoption accelerating, regulatory clarity improving, macroeconomic pressures mounting, and retail attention still focused elsewhere. XLM's price consolidation between $0.39 to $0.4 support and $0.47 to $0.5 resistance represents what institutional traders recognize as accumulation patterns. Algorithmic forecast suggests $0.42 breakthrough probability increasing as DeFi adoption and stablecoin volume expand. Machine learning price aggregators identify bullish flag formations with conservative targets of $0.75 to $0.87 by year-end 2025 based on a 3.5 times increase in daily transaction volume. Bullish scenarios range from $1.29 to $1.44 under conditions where new anchor partnerships, double asset issuance volume, and CBDC pilots scale to additional developing economies. Your decision point: infrastructure or speculation? Now, here's the twist. Every major financial transformation has its infrastructure players that capture disproportionate value. During the internet boom, it wasn't just the flashy consumer apps that created wealth. It was the companies building the pipes, protocols, and payment systems. Stellar isn't building hype. Stellar is building the financial infrastructure that enables everything else. When CBDCs launch at scale, when remittance costs drop globally, when tokenized assets become mainstream, XLM holders own the rails that power it all. The question isn't whether blockchain will transform global payments. That's already happening. The question is whether you'll own the infrastructure making it possible or watch from the sidelines wishing you had paid attention. The call to action. So here's what I need you to do right now. If this connected dots you hadn't seen before, smash that like button to spread the word about what's really happening in institutional crypto adoption. Subscribe and hit the notification bell because we're just getting started on identifying infrastructure plays before they become obvious to retail markets. Drop a comment telling me, are you positioning for the infrastructure revolution or still chasing speculative trades? I want to know if you see what I see, or if you think I'm completely wrong about Stellar's trajectory. Remember, opportunity doesn't announce itself politely. It whispers through pilot programs, regulatory filings, and enterprise partnerships that most people ignore until it's too late. Stellar is whispering about a $37 trillion payments transformation right now. The only question is, are you listening? Because when the history books are written about the digital transformation of global finance, I guarantee you this, the winners won't be the people who chase hype cycles. They'll be the ones who recognize infrastructure being built while it was still under the radar. Don't say I didn't warn you when XLM is powering the financial system that governments, corporations, and humanitarian organizations actually use to move money around the world. The revolution is happening right now. The only question is whether you're part of it.